Welcome back to the channel, friends. So today I am going to tell you about another part or another feature of TradingView chart. So recently I've uploaded two videos about TradingView chart, which is a separate playlist in my channel to understand how to use, and it include all the details of how to use TradingView chart, in which the first portion has this upper line, introduction to this upper line, and then we started this portion. I shared this one already in the second video. First video was about the top page, second one was about this one. The third one is going to be about these patterns, but initially let me tell you about these two channels. These are not important, but these are just to draw shapes like rectangle or circle or whatever you want to draw. This is used for that, and that's not very significant. This is the text portion. You can add text of whatever you want and arrows and everything. The main thing that I will tell you about is here, patterns. There are different patterns that we can use: X, ABCD pattern, cipher pattern, ABCD pattern, and the most important are Elliot wave, Elliot impulse pattern, Elliot triangle wave pattern, the Elliot wave patterns. Elliot wave patterns are very important in the market, and the way of use depends, but they are very important. For example, initially I will just draw a basic line of Elliot wave pattern, that what it actually is. Okay, and after this intro we will go in detail. Okay, let's start with the Elliot impulse wave 1 2 3 4 5. Let's start from here. 1 2. It means the wave started from this point and then came here. Then we saw a correction wave here. Then we again went up, again a correction wave, and then again up. It actually shows a upward trend, a bullish trend. You can see it shows us that the market is going up. You can adjust its its quality here, darker lines, you color whatever you want, and it will show like this. Let started from here and then here, and this was the pattern. And in this pattern we can, if the market is here at this point, we can estimate that starting from here we came right all the way here, then here, and we can assume that next move will be down, correction will be here, and then again a bullish move. Okay, so we can take entries like at the points like this point or this point. This will be earlier one, but actually we will take entry from here and go all the way here. So this will create a good post, a good not a post, a good trade for us. Okay, drawings removed. Now to see how much it will, the correction wave will stands, we use Fibonacci retracement. It's actually a different lecture, but I'm just telling you the basic. Starting from here, it went all the way here, and the correction was up to this point. And if we go forward, like here, where the market stands now, we can estimate by Fibonacci retracement that the market went up from here. So the correction can come up to this point, 0.6, which is called the golden ratio. I will explain all this in the lecture about Fibonacci retracement. At this point, these 2 points could be the level of correction till 19,000. Okay, if sometimes we see 100% correction till here, but generally it's at 0.6 and something. So if we find a pattern like this, we will take the entry at this point, but we will wait for a confirmation that if after touching this line, if the line stays up, then we and not breaks down, then we will take an entry. And after taking the entry, we will draw a Elliot wave pattern from here, 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 here. No, it's wrong one, sorry. You have to draw it all the way here. Then it came down here, for example. Then we will go upward like this, like we came here all the way. Then again correction wave will still be estimated by Fibonacci retracement, and then a wave upward, something like this. So a pattern like this will be shown, and in the end, if you come up, I showed you this regression trend starting from here. Wait, not regression trend, parallel channels starting from here, come all the way here, and assume that the market moves like this. So we can say, correcting at this point, it will go up here. You can add some correction in it like this, then it will come down, and then it will go up here again, or even more. Okay, so this is Elliot wave pattern that help us analyze the current market situations. But there is another thing in Elliot waves. Let me clear the drawings, which is called Elliot correction wave. Here it is. Correction wave is generally, if we come down like this, this and this. This is the generalized correction wave. For example, coming to this point where we drew our old lines, let's draw it again. 1, 2, 3, 4, 5 and 6, 0 to 5. Okay, so this is a Elliot wave pattern. So let's draw a correction wave. Correction wave is always the one that is against the trend, like trend starting from here, the bullish, and the correction is downward here, the bearish. Starting from here, it went all the way here, then upward, and then again back. And if we want to consider it more deeply, let's make a go to a shorter time frame. It will be easy to understand that how the correction took place. Hello, here we go. Look at this. What was the point? Then downward, then upward, and again downward. If you come to the next point, it will still shows here you get upward, and then a correction. But here the trend was changed and the market didn't go upward again and consolidated. But you can consider it from here. Always a correction wave, a Elliot wave looks like this 1, 2, 3, 4, 5 and 6, like this. Let me move it upward, like this. And the correction wave, whenever it's a correction wave, it will look like Elliot correction wave coming from here, down, up, down. Okay, and again when you draw next pattern, it will go down, up and down. It could be less volatile or more volatile, but it will be like this always. Okay, so these are the correction waves. If you go in again in deep, like this ABC, in a smallest time frame, like if you are considering 1 day time frame for this one, you'll consider 4 hour for this, and then what I'm going to tell you can go for 1 hour time frame to consider this one. It will still be like yeah, 1, 2 here, and then downward. It will, this line, this wave that is upward will still show you some consolidation, some movement, and then it will come all the way down, and then another wave will start, and then another. In this correction wave you will still see a pattern like an Elliot wave. So it will collectively they make a large Elliot wave pattern. Okay, sorry, this was a wrong drawing, but it looks like this. Okay, so these are Elliot wave patterns which are most commonly used in markets, and Elliot wave patterns are actually very important when we are determining a long-term trend. Okay, so long-term trend, like we can check it in weekly time frame too. Where's the chart? Yeah, here we go. Here we go. Yeah, I was so backward. So you can consider it here too. like going upward, going downward. But if the wave is opposite, sorry, I forgot to tell you that. If the wave is opposite, you can go like downward, correction, downward, correction, and downward. Looks like this. Actually, it's inverted. I'm having a trouble drawing this, but let me correct it a bit this way. Yeah, look like this. And the correction wave is that which one is upward. So the correction wave will look like Elliot correction wave look like this: upward, again downward, and again upward. This will be the correction wave if we go downward. So these are the pattern that market generally follows, because you will not find something like starting from a point and then coming down suddenly like this. No, it will come from this point to this point, but the whole pattern will depend upon the Elliott wave pattern like this: 1, 2, 3, 4, like this, something like this, not like this but something like this. So this will tell you how the trend is going downward or how the trend is going upward. This will be the pattern, or something like this will be the pattern. Other one could be, for example, I drew it something like this. It can go this way, then go down, come down, then go this way, and then again come down, and it's like this. It's following the pattern. Can come all the way at this point. But this volatility where the market moves up and down, this is actually the opportunity for short time traders. They take purchases from here and come all the way down, and then those who place short, which are bears, they can start from here and come all the way down. Bulls can start from here, come all the way up, etc, etc, etc. So these were the Elliott wave patterns that I explained. I hope it will be helpful for you to understand many factors. We'll meet in another video. Goodbye, take care.